Earnest money, what is it and how does it affect the buyer? Earnest money is monetary proof that you, the buyer, are serious about buying a home. Earnest money may accompany an offer, or it may be due within a certain amount of days after the offer is accepted, as per the terms of the written contract. When the earnest money has been received, then the money is documented with the receipt and it is deposited in an escrow account, usually with either the real estate company or the settlement company. Earnest money gives the seller some protection during the time their property is off the market, and provides them some reassurance that the buyer will not just back out without having a good reason for doing so, as specified in the contract. With increased competition among buyers in the last 2 years, many savvy buyers are actually increasing the amount of earnest money they're offering in order to signal to the seller that they are very serious. In the Central Virginia area, earnest money is usually somewhere between $1,000 to $5,000, depending on the purchase price of the property. But the amount of earnest money that is offered and ultimately required for the offer to come together is up to the buyer and the seller to negotiate. In the past couple years, we have seen higher earnest money amounts offered to sellers than ever before. So when making an offer, the buyer decides on an initial amount of the earnest money they'll offer. A seller may accept the amount of earnest money offered, or they might counter the offer for a higher amount of earnest money. At closing, the earnest money that is held in escrow is then credited towards your remaining closing costs. So, for example, if the buyer's closing figures show that the buyers need to bring $5,000 to closing, and the buyer initially presented $1,000 earnest money, then the buyer will only have to bring another $4,000 to closing for the total payment of $5,000. There are some ways that buyers might get their earnest money back. For example, after a buyer completes inspections, if they and the sellers can't come to an agreement on the repairs, they can cancel their contract and receive their earnest money back. It could also happen if the appraised value comes in lower than the purchase price and the contract contains what we call an appraisal clause stating that the property must appraise for a value equal or greater than the purchase price or be renegotiated. But you and the seller cannot come to an agreement about the purchase price. There are some scenarios that may occur in which the seller may be entitled to keep the earnest money. One example would be if the buyer has done inspections per the terms of the contract, but they don't object to the property condition in writing by the objection deadline. Then the buyer elects to walk away from the contract due to the property condition, leaving the seller no choice but to start all over with the process of finding another buyer. These are just a few examples of the role earnest money plays in a real estate transaction. I can't emphasize enough the value of working with an experienced real estate agent when you are buying a home. Someone who can guide you through every step of the process. I'm Anita L. Williamson, and I want to set you up for buying success.